Learn is on the beat with Gen Z Auditor. Yeah.
Whether you do walk, ride, sleep, cook or gym, Audit go enter your head.
Let's vibe and learn together.
Come on, I didn't know the tires. Oh, I didn't know the tires. Oh, I didn't know the tires. Yeah, risky no the high for me. Materiality they guide auditor. Hallelujah, it's a no they fail me. Oh, no they fail me. I didn't know the tires.
It's a 300.
Hello, welcome to today's video. In today's video, we're going to be discussing ACCA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with ACCA. According to the ACCA 200, the auditor's primary objective is to obtain reasonable assurance that the financial statements as a whole are free from material misstatements, whether due to fraud or error. Let's break it down. So, for an independent auditor to carry out an audit, your primary objective, the main thing you're setting out to achieve according to this standard, you're trying to obtain assurance, like trying to gather evidence and be able to come to a conclusion. And that conclusion is reasonable assurance, which is a high level of assurance, but not an absolute level of confidence, because these financial statements will be prepared by management and you're just coming in as an independent auditor, which in most cases to be an external auditor, an external body that is coming to audit this financial statement. So you can't give an absolute assurance. You can only give reasonable assurance based on the support evidence, based on the support documentation, the information you've been able to gather, and management representation. So this standard says that your primary objective is first, you want to obtain reasonable assurance on what? That's the financial statement that you've audited, which in most cases will comprise the statement of financial position, the statement of comprehensive income, cash flow statements, statement of changes in equity, and then notes to the accounts. They're trying to give reasonable assurance that all these financial statements we've audited as a whole are free from material misstatements. A misstatement is material if an omission or presenting it wrongly can influence the user, the economic decision of a user. Let's take, for instance, if a set of investors were to invest in a company, and then because of a misstatement that was made in that financial statement, they wouldn't have invested in that company. Had it been they knew that there was such an error in that statement, that means that information is material. Take, for an instance, a company that has a revenue of $10 billion, for instance. If there's a misstatement of $1 million, it will be immaterial. But in most cases, to the investors, it won't really make a difference based on the size of that company. Although materiality, but that will be discussed in a later standard. Just keep on following this channel. So now, in this case, for information to be material, the basic thing you need to know is that it should be capable of affecting a user's economic decision when the investors, the lenders, the banks, anybody that is making use of that financial statement to arrive at a decision, whether to lend to the company, whether to invest, whether to anything that is related to making a decision to that company. That information, if the omission of that information or including it but it was wrongly misrepresented, okay, would have affected the decision of a user, it means that it is actually material. So now another thing is that the materiality and the misstatement is usually due to two key causes, either fraud or error. Okay, forgive me, I talk fast, I'm trying to slow down. So the misstatement is usually due to two key causes, either fraud or error. Now, the key difference between fraud or error is whether it is intentional or not. Intentionality. Is it intentional? Was it deliberate? Was it consciously, like intentionally, like you deliberately did this? It wasn't a mistake. Okay, so when you talk about fraud, it means an intentional act to mislead or cheat. Like intentionally, management is trying to manipulate some things, maybe to reduce the expenses, maybe to overstate the assets, probably due to their own financial gain or something. So if it's intentional, management intentionally concealed or omitted or misrepresented some figures in the financial statement, is fraud. Note the key difference, it is fraud, but it's still a misstatement. Then an error is when there's an unintentional mistake in the financial statement. Management did not set out to do this. Management was in the normal course of keeping the financial records, preparing the financial statements, probably due to lack of competence on management part, or maybe oversight, maybe management overlooked some things, or maybe management did not really understand some of the key requirements of the applicable reporting framework, which in most cases may be IFRS, or it can be UK GAAP, it can be IPSAS for public sector entities. So management might have unintentionally, maybe there was some key requirement of IFRS and management did not really understand how this was supposed to be stated. So maybe unintentionally, they were not able to apply that in the manner in which they ought to. So it was a mistake on the part of management. That is when it's called error. But fraud is when it is intentional. Deliberately, management decided to do this for their own gain. Maybe they want to make their books look good, they want to raise some capital, they want to get bank loan, they want to get some investors, and then intentionally management wanted to, or maybe the key management staff, they have performance bonuses that are tied to the financial performance of the company, and then intentionally management decided to misrepresent some figures. That's when it's called fraud. Okay, so let's go on. So the auditor's primary objective, according to this standard, when you're setting out to audit an account, a set of financial statements as an independent auditor. Independent auditor, very, very key. You have to be independent for you to be able to give this reasonable assurance. Okay, so your primary objective is to obtain reasonable assurance that the financial statement as a whole are free from material misstatement, whether this is due to fraud or error. Then secondly, when you are done with this, at the end of your audit, you have to report on the financial statements and communicate as required by ACCA in accordance with the auditor's findings. So once you are done setting your objective, obtaining this reasonable assurance that the financial statement you've audited is free from material misstatement, whether this was caused by fraud or error, you need to make a report on the financial statement. That's the second objective of an independent auditor, according to ISA 200. Now, what are the key requirements for you to be able to achieve this in a way that ISA requires? You need to keep two things in mind. You have to maintain professional skepticism throughout the audit. From the beginning, from the planning to carrying out the audit to the reporting phase, you need to maintain professional skepticism. Now, professional skepticism requires questioning with authority. You don't take everything management tells you at face value. You don't take all the information management gives you at face value. You question with authority. And for you to question with authority, that means you need to know what you're doing. You need to know if it's the applicable reporting framework. For instance, if management is applying IFRS, for instance, you need to know all the standards, the key requirements, the way it's meant to be reported, like the way accounts are meant to be classified, how they're meant to be disclosed, the disclosure requirements, how everything is meant to. For instance, IFRS 15, you need to know the criteria for revenue recognition. So now you need to, for you to now be able to question, like when something is wrongly reported or not in the way it should have been done, you will be able to question management with authority. That's maintaining professional skepticism. And then you should also be able to exercise professional judgment throughout the audit. So now professional judgment is you being able to advise management on the correct accounting treatments, and being able, if there are places that there are adjustments that needs to be made, you should be able to advise management on the necessary adjustment that needs to be made. It's not enough to be able to point out things that have been done wrongly. You should also be able to suggest, not even suggest, to advise and recommend, and be sure that management implements the correct accounting treatment. And you will not be able to do this if you don't have that information, if you don't have that knowledge. That is why one of the core code of conduct for accountants is professional competence. You should be able to do the job of an accountant to the best, like to the best quality. So you should know all the applicable standards, all the IFRS accounting standards that must apply in every circumstance, including other national reporting regulations. Okay, so now do not forget that ISA is actually basically two things that you must keep in mind. First of all, you have to obtain reasonable assurance, and then you should be able to report on the financial statement. Obtain reasonable assurance, report on the financial statement. Now for professional skepticism, let's just look at a relatable scenario, which actually happened, but some of the key facts have been twisted to make sure that it doesn't resemble any real occurrence in real life. Okay, so Adora was a first class graduate of accounting, and she was also chartered, and then she met this young man and she fell in love, and then they got married on the premise that after the marriage, she was to join the guy overseas where he was residing. Then after the marriage, the guy left her in the village to cater to his aged moms and numerous family members. And the key twist was they didn't even let her work. All the family finances for maintaining the house was being sent to the mom, was being sent by the guy through the mom. So the lady in question had no access to phone, and she was also not permitted to work. And she was a chartered accountant as well. And she already has first class degree from accounting, like I mentioned. So now, are we going to blame the young man for not keeping his words? Or are we going to blame Adora, the chartered accountant, who dropped her knowledge when love came knocking? As a chartered accountant, she should have been able to question the young man's intention, question his character, and she should have been able to do some research before she would agree to such an arrangement. So you can say that ACCA doesn't just apply to your professional lives, it also applies to our personal life. You are meant to apply what skepticism in everything you do, and you should be able to judge professionally before you commit to some certain kind of decisions or some certain kind of commitments. You should be able to judge the whole thing, see the big picture, consider everything, the right and the wrongs, and then you should be able to make the best decisions given all the available information on ground. So do not forget that ACCA is here to help, and ISA 200 specifically requires you as a professional accountant to maintain professional skepticism and exercise a professional judgment. Do not take anything at face value. Do not accept everything management tells you during the audit. Question everything with authority. Question everything with authority, and also apply your judgment. And do not forget that your primary objective is to obtain reasonable assurance that the financial statement as a whole are free from material misstatement, whether this is due to fraud or error. Please and please do not be like Adora that accepted everything and fell for the love life that almost wrecked her life. You can also let us know in the comment section what you think about this. And as of now, I do not know Adora's status, or maybe I can get back to you on that to know her current standing. Thank you for listening. Do not forget to watch the video to be able to watch the video I'm going to link to this to be able to memorize the key requirements of this standard. Thanks for watching. See you in the next video.
Learn is on the beat with Gen Z Auditor. Yeah.
Whether you dey walk, ride, sleep, cook or gym, audit go entire.
Let's vibe and learn together.
Come on, I didn't know the tires. Oh, I didn't know the tires. Oh, planning know the tires.